Let's begin with tonight's big one. The Monetary Policy Committee of the Central Bank has cited favorable economic outlook for the significant reduction in the policy rate. The Bank of Ghana dropped its key lending rate to banks by 100 basis points to 16%. Let's hear from the Governor of the Central Bank, Dr. Ernest Addison, who addressed the press today.
The committee also noted that external financing conditions remain tight and uncertain, presenting financing risks to the budget with implications for the exchange rate. This calls for a recalibration of the financing policy mix towards more domestic financing by domestic investors to reduce the burden on the exchange rate, reserve accumulation, and monetary policy. The committee also observed that domestic growth remains fairly robust and in line with projections. Over the medium term, growth prospects are positive and would be supported by increased oil production and the easing of the credit stance. With the recently ended recapitalization, banks are also better positioned to support economic activity. The committee also noted that inflation has steadily declined from 15.4% at the end of 2016 to 11.8% in 2017, and further down to 9.4% in 2018, supported in large part by non-food inflation. The bank's latest forecast shows that inflation will remain within the target band of 8 plus or minus 2% over the forecast horizon, barring any unanticipated shocks. The committee noted that the immediate risks to the disinflation path are well contained, and the current conditions provide scope to translate some of the gains in the macroeconomic stability to the economy. Under the circumstances, the committee decided to reduce the policy rate by 100 basis points to 16%.
That was the Governor of the Central Bank, Dr. Ernest Addison, and we are told that this is the lowest we've seen since March last year. And you'd expect that economists will greet this with excitement, but no. Let's hear from economist Courage Martin, who says he's surprised by the cut in the policy rate by the Bank of Ghana.
I think it's a surprise. I can understand that there's been some gains made over the last 24 months or so. We've seen inflation decline from 15.4 in December 2016 and down to 9.4% at the end of 2018. So there's been over 500 basis point reduction in inflation on that count. We've seen also that we've recorded some improvement in the foreign exchange market. And growth has recovered, but still below expectation. And so on those counts, you would think that you want to move in line with growth and boost growth a little. But it's a surprise because if you look at the current developments on the market, we are still seeing some emerging depreciation pressure, particularly the quarterly depreciation pressure and the uncertainty around foreign investor behavior on our market and how it is telling on the currency stability. And one would think that if you annualize the pace of depreciation we have seen in the first 4 weeks of this year, it calls for reasons to be cautious, and on that count, it came as a surprise to see the reduction. Also on the count of fiscal risk, you notice that the governor stated that provisionally at the end of 2018, the overall deficit recorded a 3.8% deficit on rebased GDP, as against a target of 3.7% of GDP. That means that there was overruns on the overall budget deficit equivalent to 0.1% of GDP. That means something for aggregate demand and liquidity pressure, one that you expect monetary policy to be vigilant and mop up, especially within the context of 2019 budget, which is going to be another expansion in fiscal operations. Within this fiscal context, you will expect that monetary policy will be a lot more vigilant and more tight in order not to elevate the pressures that will be coming from fiscal operations for 2019. And that is the back upon which it came as a surprise.
All right, so meanwhile, another economist, Professor John Gachi, says this new policy rate will not see any impact on the cost of doing business.
Will not react in any way because we have reduced the policy rate from 26% to 17%. We couldn't record any much gain. So reducing from 17% to 16%, I do not think that there is going to be any extraordinary development in the market.
Even after the banking sector reforms have taken place, you don't think it will impact?
I didn't get that point.
Even after we have seen a banking sector reforms, which we have, recently.
The banking sector reforms have gotten to another phase, which we need to pay attention to. The number of banks which are safe and the number of banks which are considered not to be safe and have been consolidated are facing some challenge in terms of liquidity. Those are the things we should focus on. In fact, most people who are leaning towards those banks are having difficulty in terms of access to credit for their economic activity. And unless we restore a vibrant liquidity situation for those entities, we may not achieve what is expected in the overall reform process. So I think we need to look at that. We shouldn't be happy just because some banks have used their book a transaction to get minimum capital and that is the end. No, we need to do a lot more to make the banking sector more robust, more responsive and sound in contributing to proper economic financial intermediation.
All right, so those were the thoughts of Professor John Gachi there. As we talk about the central bank bringing down the policy rate to 16%, we also talk about the trickle-down effect because we expect that it will also translate in a reduction in the cost of credit. I mean, how much interest the bank adds when you access loans. Let's bring up our poll for today as we have been gathering your thoughts tonight on whether or not you expect your banks to be kinder to you following the announcement of the policy rate to 16%. And there you can see it, 83% of you say you expect your banks to be kinder, 17% say no. And that is no surprise because we expect the trickle-down effect, but we are not seeing that happen. What we are seeing now just gives you an idea how many people are looking forward to the banks sort of reviewing interest rates on loans. Let's bring in Joy Business Assistant Editor, Northern Aqua Hayford. I mean, you're not surprised by what you're seeing, right? But is it also wishful thinking that we're expecting that since we've seen this announcement, the banks automatically will reduce the interest rates on loans?
Daryl, that should be the ideal thing. Because if the cost of, borrowing from the central bank, by the commercial banks themselves is reduced, then there should be that trickle-down effect, to ensure that you and I who also go to these banks to borrow money comes down. But then you still want to look at what is still the cost of credit in this country. When they get the money, apart from going to the central bank, the banks also look for money elsewhere. They take monies from other places. And so all these things count. And when a bank is giving you a loan, there are a lot of things that they look out for. Your credit worthiness, they are also looking at the risk involved, inflation within the country. All these calculations goes into how much is going to cost in giving you that loan, in ensuring that, okay,
but just to be fair, I mean, we've seen the policy rate being maintained at 17% for a while, and we've seen it gone down at this point. And I believe that previously we've seen it at 20 over 20, and we've not seen any, should I say drastic, maybe not drastic, maybe minimal decrease in the interest that banks charge. And they give us the excuse that it's not just about dropping the policy rate, it's about the other things that we have to deal with. But just to be fair to the customer.
Yeah, that is to be fair to the customer, Daryl, as you say. But also remember that, the central bank at some point last year introduced what we call the Ghana reference rate. In fact, that is what today commercial banks in the country use in calculating the cost of money that they give to you and I. So in terms of interest, let me use the very simple words that everybody understands. Interest on loans that we take from these banks is a Ghana reference rate. And that, the calculations are done for us as and when. And depending on which bank you're saving with. Remember, even when the policy rate used to be around 20 something, of course, it differed from bank to bank. You had banks charging over 40% as their base rate. You have banks that had 37. You had banks that had up to 32. So you have a choice as a customer to look for which bank you want to save. I know there are banks in this country that they'll tell you that, look, depending on which government even is in power, you can tell their rates dropping, and some are using the straight line method, which means that they calculate and tell you you're paying, let's say, 20% or 27% or 30% across onto the number of months that you're supposed to use in paying that loan or number of years. Right. Some are using what we call the reducing balance, as in when you pay, the interest on the loan also reduces. So if you're going into a bank for funding or to take a loan, you need to check all these things, and that will help you get a better deal.
I mean, you've been reporting this for a while. I mean, what do you foresee that this could trigger a review from the banks on determination of interest rates? Do you foresee that? And don't be a pessimist like we've seen the economists be tonight after such wonderful news. Is anything going to change for individuals and for businesses, do you foresee?
Of course, that should be. And of course, the next date for the Ghana reference rate, I'm sure that when that comes, you see a drop in that. Because, I mean, now there's a different formula in calculating interest on loans. And so all the banks use the reference rate, and then whatever they need to add on in terms of the risk factors, and the risk factors, some are the fact that, the addressing system is not very good, and so these banks calculate all these things and put into it, so that tomorrow, if they give loan to Northern Akwa Ibom, then they can find him. I mean, they know that, okay, if they have try to amortize the loan, why not? They are safe as a bank, or put an insurance on it. They are safe as a bank. So all these things go into it.
All right. Northern Akwa Ibom, thanks very much indeed for bringing us some perspective. And he was nice. Thanks very much for your time tonight. So let's move away from this topic of the policy rate. Of course, it's an issue that we'll be delving into subsequently. And turn to another important event today. Today, International Customs Day. Well, Deputy Trade Minister Carlos Ahenko has assured that government is making efforts to deal with reported cases of high charges and import duties at the ports. According to him, the Ministry of Trade and Industry will be creating a platform for officials of the Ghana Revenue Authority and importers to discuss ways of addressing these challenges. He was speaking at the International Customs Day event in Accra. There's more in this report.
After 2 years of reforming operations at the various ports in the country, there has been concerns that import duties are high, while unfair charges and other trade-related practices continue to impede smooth trading. This has resulted in some agitations from business associations and corporate agencies impressing upon government to find a lasting solution to the challenges. Alexis Yama is chairman for the Tema Secretariat of the Ghana Institute of Freight Forwarders.
The only thing that has changed is it has moved from one area, one point of the chain to another. And then when you go to the port, goods can be scanned, and still officers will not be happy with the scanned document, the scanned images, and they want you to open the container for physical examination. And then cargo that has been examined, and then another agency show interest, and he also said, I also want to take interest in this particular examination.
According to the Deputy Minister for Trade and Industry, Carlos Ahenko, some of the challenges have been identified and government is working to avert the situation. He disclosed that there will be a stakeholder dialogue to engage all importers as well as representatives of the Customs Division of the Ghana Revenue Authority to reach an agreement on the anomalies.
The most prudent and efficient way to collect these taxes. It's just unfortunate that a system that was aiding customs to collect the duties or to value cargo was so, let me say, discretionary, let me use the word, because custom officer would draw down on a particular price of a product, and he will get 6 or 8 prices there. He has the discretion to choose one. You can't fault him. So you see situations where imports are coming from the same place, but values are different for different importers.
Participants at this year's International Customs Day celebration in Accra agree that having a dialogue is the best way to deal with the challenges. Isaac Cranesell is the Commissioner of Customs at the Ghana Revenue Authority.
The issue is got to do with engaging, and that's what this year we have set upon ourselves, to engage the traders, for them to really understand what is happening, because the laws are there, the regulations are there. But what is very, very important is that we sit down with them and let them understand and appreciate even our processes and procedures, the laws, whatever that they can do to ensure that they comply. And this is what we have set up ourselves, and this is part of the theme of this year's International Customs Day.
The World International Customs Day is a day set aside for custom officials worldwide to acknowledge their role in nation building. This year's edition is under the theme Smart Borders for Seamless Trade Travel and Transport.
Now, Cocoa Board has denied claims it is a loss-making institution. Following reports, it is seeking a $300 million loan facility to service cocoa bills. Fifi Bafo is manager of the Office of the Chief Executive at Cocoa Board. He's been chronicling to Joy Business how Cocoa Board agreed on this decision.
Of course, at a point in time, we'll be making losses, and there is a reason for that. And I'm sure whoever is interested in the industry or whoever has followed the industry will know that this is the reason why Cocoa Board has such a challenge. And to conclude that it's a loss-making organization, I think it's far-fetched. We are taking the $300 million to pay for what we refer to as cocoa bills. Cocoa bills generally refer to money we take from the Bank of Ghana, a loan we take from Bank of Ghana to finance our operations. And I'm sure everybody who's been following the cocoa industry is aware of the fact that if you look at the international price compared to the local how much we give to cocoa farmers, that is the farm gate price. Government has taken the decision not to reduce the price. It comes with the costs, and there's a need for you to bridge that gap. Beyond that, I think we've also made the point that at a point in time, we needed some money to support, because somewhere January 2017, there was an issue with the funds availability to purchase cocoa. So we had to take some loans from the Bank of Ghana. If you look at the interest we are paying on those loans, I think it is in one way or the other overburdening the institution. So we have the view that we could secure funding that will come with a more or a less burdensome interest rate. So why don't we resort to this option? So we decided to go for this and pay part of the cocoa bills we have with the Bank of Ghana. So mainly it is to pay for loans we've already taken from the Bank of Ghana, which we believe that the interest on those loans are quite high, and there's a need for us to refinance these arrangements. So mainly that's what it is. So we guarantee the facility with cocoa beans, and for a 3-year period, we are guaranteeing about 50,000 metric tons of cocoa, and that should be able to finance the loan facility. Usually with the annual syndication we do, there's we put together, like, how do I put it? Every year we decided, okay, probably we'll use 600,000 metric tons of cocoa for our syndication. We produce about, say, 800,000, 900,000. So there's a percentage of it that we use to finance the facility. And what we'll be using to finance this facility is about 50,000 metric tons a year. Per our own calculation, we think that it should not be a problem for us to repay this facility over the period.
Finally, there's also this argument. What happened to the syndication? This layman arguments that if you took the syndication, then why go for this one as well?
It is all well and good to say that if the price is falling at the world market, decrease the price. But I'm sure those who have been making this argument have also heard those who have been arguing strongly that regardless of what is happening.
All right, let's turn to another important commodity, that is oil. And for oil and gas producing countries in West Africa to benefit from the commodity, it requires various countries working together. That's one of the resolutions at the just ended West Africa International Petroleum Exhibition and Conference. Now, Chairman of the Petroleum Technology Association of Nigeria, Bank Anthony Okoroafo, stated this at the end of YPEC 2019. He spoke to me afterwards.
The main idea is to help each of the countries build capacities and capabilities, help each of the countries create policies that will help to create employment, that will create set-up structures, that will create more entrepreneurs. Also, let all the countries understand that build capacities and capability without jobs, it will get you nowhere. So basically, the framework of the conference has been the way to lift all the countries out of poverty line and create so much employment, so much opportunities for their people, and also let people understand the value of training so that the young ones we are bringing up today can compete in the world of tomorrow. These days we are talking of predictive engineering, predictive maintenance, predictive operations. Who is going to do those things if they are not trained? So Africa, go ahead, train all your people, build capacities so that we can compete tomorrow, can be the entrepreneurs of tomorrow.
All right, and that conference brought together 3,000 participants and over 100 exhibitors. That'll be it for Business Live tonight. Thanks for watching. There's more news on our website, joybusinessnews.com. My name is Daryl. I'll be back same time tomorrow.